Hello guys, welcome once again to Traders Delight. How have you been and how has been your trading sessions? Hope you have been getting amazing results from all your trading activities. If you're new, I welcome you to my channel. Welcome specially. I encourage you to subscribe to this channel and turn on notification bell so that once I upload a new video, you are alerted and you can benefit from it immediately the video is up. I commend as many have been following my channel and have been liking my videos and commenting. Thank you so much for doing that. If you are watching it right now, kindly go to the comment section and comment "I love price action" so that I can know you are following the series. Today we are going to continue with the price action training series, and today is part 4. This is part 4 of the training series, and last video, we talked about the concept of mass psychology. We looked at price chart. We look at how you can represent it, and I recommended that you use the candlestick chart because it really has a lot of information in it that you can really benefit from. So today we're going to continue from there, and then looking at the candlestick chart. Look at the way it is now. You can see from here it looks as if you are seeing lines and lines. However, when you zoom in, let me zoom in for you to see. So you see, when you zoom in, you see that you are seeing different kind of candlestick. Take for example, look at this. This is a candlestick, another candlestick, this another candlestick, another candlestick. See, this one has a thin line both above and below, and this one has none. You can see the color changes and like. So we want to look at it, and then the understanding we need when it comes to price action as regards this. So I want to take you to a picture now where I'm going to explain this deeper, and then we'll take it from there. So guys, welcome, and as you can see, this is a typical diagram of how a candlestick looks like. As you can see, the main part is called the real body. That is where you can see the green color here, the red color here. Now these two are not the same. This is a bullish candlestick and this is a bearish candlestick. Please take note. This is a bullish candlestick. This is a bearish candlestick. So this filled up part is usually called the body. It might be as long as this, might be even smaller than this. No matter what it is, this part that is filled up is called the body of the candle. Now, why is this a bullish candlestick and why is this a bearish candlestick? This is a bullish candlestick because it opens below and closes above. Please take note. It opens below and closes above. That's why it's a bullish candlestick. But this is a bearish candlestick because it opens above and closes below. It opens above and closes below. Now, when you are looking at candlestick in regards to price action, you need to take into account what is happening to this candlestick because you are not using indicators. So you need to pick as many information as you can pick from here. Now, the candle has two parts. One is called the shadow and the body. Now, the shadow part are two. We have the lower shadow, we have the upper shadow. Now, let me take that again. Candle has two parts. Candle has the body and the shadow. Now, the shadow is divided into two. We have the upper shadow and we have the lower shadow. Now, when you are looking at a candle is a representation of the time frame that you are looking at. So if you are looking at it from a 1 minute time frame, it means that this candle will open here, open below here, and close here in 1 minute. This will form in 1 minute. So also this is going to open here and close here in 1 minute. So it will take 1 minute to open here and come here. So if it's a 5 minutes time frame, it will take 5 minutes to open and close. It will take 5 minutes to open and close. So the candlestick is a representation of the time frame that you are looking at. So if it's 1 hour, it means that this candlestick represents the duration of 1 hour. If it is 1 day, it means this candlestick represents 1 day. So that you will know, once you are looking at the time frame you're looking at, you must understand that this candlestick, the higher the time frame, the duration it is for it to complete. So this one represents the duration for the time frame that you are operating from. Now, when you are looking at shadow is very important. This shadow can also be called wick, can also be called pressure. Now, when we say wick and pressure, this is what I mean. Now, when you're looking at this is a lower wick, or this is called the bullish pressure. Now, I told you that this is a bullish candle. Now, the candle name is not influencing what this is. Whenever you see this lower shadow, it means that there is something called a buying pressure or a bullish pressure. Whenever you see this higher shadow, it means there's something called a bearish pressure or selling pressure. Now, the important thing you need to notice is this. What makes a candlestick bullish is because there is pressure pushing it up and is higher than the pressure pushing it down. The pressure pushing it up is higher than the pressure pushing it down. That's why it is bullish. It is bearish because the pressure, the selling pressure pushing it down, is higher than the selling pressure pushing it, buying pressure pushing it up. Please take note. It is bearish because the selling pressure pushing it down is higher than the buying pressure pushing it up. So when you are using this, because you're going to use this very soon, when you are using price action, after you have checked the trend and you have done the trend lines, your support and resistance, you have looked at the chart patterns, there's something called the candlestick pattern, which is what you're going to look at. We're going to deal with it later on, but what I want you to note is that the candlestick, as much there are several candlestick patterns which might be difficult for you to just cram everything or just know everything. However, once you know this basis, you can apply it to everything. The main thing that says a candle is going up is when the pressure of the buying pressure is higher. So when a candlestick is like, we're gonna go back to the chart and I'm going to show you an example so you understand what we are saying. When a candlestick is this way and you are seeing that all of a sudden it's even making this body to reduce and the lower shadow is so high, it means that this is telling you, is giving an information that the market is about to go upward. For that time frame that you're looking at, it's about to go upward. When there is a certain pressure that pushes this body to be so small to this area, it means that the market is telling you, using this candlestick, that is about to go down. Now let's go to the chart and then see some example and then close for today. So we'll see. I don't want this video to be too long. Now look at this, for example. So you see, look at this now. This is a bullish candle, but this is giving an information. Look at this part now. You can see the lower wick or the lower shadow or the bullish pressure is higher than the upper wick or the bearish pressure or selling pressure or the upper wick. So this one lower is higher than this, which is saying that there is a pushing upward that is about to happen, and you can see that this followed. See this now. Look at this. This is telling you that there is a selling pressure. Look at the way it pushed it. The upper shadow here is longer than the lower shadow here, and it's showing you that something is pushing this market downward to sell. And you can see what happened here. See how the market went. So this information that you can get from a candlestick is very important, and you must take note. And very soon, maybe in the next video, I'm going to show how it is significant, because you're going to take note. Am I seeing this at a level of support, or level of at a boundary of a trend line, maybe higher band of, or boundary of a trend line, or a channel? Or am I seeing this at the neckline of a pattern, a chart pattern? Because it's very important. If you are seeing this at a support level, it's telling you that the market is about to reverse from whatever direction, or it's about to go up. And if you are seeing an inverted, let me check and see other ones and see. Look at this now. Now we're going to look at why this happened and then the market went up. Why will this happen and the market went up? We're going to look at this and much more later on in our next video, so that you can understand what is going on, and so that when you see things like this, should you take note of this? How should you handle it? Like I told you, the reason why I recommend the candlestick is because it has a lot of information you can learn from when you are about to take your trade, especially when you are taking it using price action. So guys, I hope you have learned one or two things. If you already know this, kindly like it, and if you learn something, let me know. If there's any question or any new thing you think you've learned in the comment section, and I appreciate the comment and the feedback. So this has a lot of information, and the more information you are able to gather from it, the more you are going to be an effective trader using price action. All right, guys, take care. If you appreciate this, like and then comment. I love trading. I love price action, so I can know you are following. All right, guys, take care.